Well, what does this rate hike mean for markets? Cliff Tant, he's East Asian Head of Global Markets Research at MUFG Bank, joins us right now on the phone line from Hong Kong. Good having you, Cliff. Thanks so much for joining in. The rate hike is a given. What would the key takeaway be if the commentary is, or the dot plot is a lot more easy than what markets are anticipating?
Well, obviously, if that happens, and by the way, it's good to be here as well. If the dot plot ends up being more dovish, that would be a big surprise, I think, to markets. If anything, we're probably expecting the dot plot to show a bit more of a lean towards tightening for this year. Mm-hmm. And the big question is 2019.
It is, but okay, so in which case, if indeed your assumption turns out to be true, which is it's a lot more stiff than what maybe the markets are going in for, do you think there is a big dramatic impact on the markets?
There may be, because I think, if the committee this time, as they're likely to do, upwardly revises its growth and inflation forecast for the U.S. over the next 2.5 years. I think that's partly priced in the markets, but probably not completely. I think some people will still be surprised if both the growth forecast and the inflation forecast go up.
Interesting. Cliff, a lot of people are believing, I was just reading through what various reports have to say, and amongst the questions that the Fed governor will have to answer, top of the mind of everybody is this stimulus coming at the fag end of the pullback that is happening, and the impact that it could have on the economy and inflation, if not now, then maybe post-2020. What are your views on the same? And what would you want to hear from the Fed when it comes to this stimulus of sorts that has been given out to the U.S. companies?
Yeah, I mean, I agree with former Chairman Bernanke when he says that the timing of the stimulus, and in fact, I think even the necessity of it is awkward for the Fed. I mean, so basically the idea is that, we get a 0.5 to 0.75 percentage point or more growth coming from the stimulus, and then everything just sort of drops off. Or as Bernanke said, Wile E. Coyote runs off the cliff. It's awkward because, the Fed right now is being blamed for things like, tighter money markets and so on, whereas, the blame might actually be more on the fiscal side as the fiscal deficit expands in response to the stimulus. So it makes it difficult, for them to continue this program of rate hikes. I mean, the staff's idea, I think, and also Chairman Powell's idea is that the economy is going really well. And so when the economy is going really well, why wouldn't you sort of normalize policy just as soon as you can? That's still sort of my bedrock belief for this year. But then you have all these other things that are not controlled by the Fed sort of interfering with this freedom to pursue policy.
Interesting thoughts. Cliff Tant, many thanks for joining us with that quick perspective. Really appreciate your time.
Sure, no problem.
All right, that's the view from Cliff Tant of MUFG Bank.